As we close out the remainder of 2023, let's just talk about our view on the economy. And there's been a lot of talk that we can avoid a recession. There'll be this soft landing in the economy. We're not even sure what a soft landing means. There's not a pure definition of that. But what we are sure of is that there are so many factors that are stacking up against the U.S. economy that unfortunately we think a recession over the next 12 months is something that we're not going to be able to avoid. We think at least a short and shallow recession will happen, and it will be healthy. We need to clear out the excesses from what's been created since the pandemic. I just want to go down a list of some of the things that we see stacking up against the economy. You know, history doesn't always repeat itself, but it does often rhyme. And when you look at the yield curve, it's always been preceded a recession. When you look at that 10-year Treasury yield minus the Fed funds rate, this has been inverted for over a year. Typically, what you see is that a recession occurs about 12 months after that yield curve inverts. So we're on borrowed time if you were just use that indicator. When you look at monetary policy, for the first time, we're starting to see monetary policy that's restrictive. We saw that the real Fed funds rate, which is the Fed funds rate taking into consideration inflation, just turned positive in March of this year. That means that the tight monetary policy we've been experiencing over the past year is starting to make its way into the economy. The consumer, that makes up the majority of GDP, the consumer has been extraordinarily resilient this year. It's defied all expectations. But when we look at the consumer, we're looking underneath of the headline numbers. And unfortunately, the consumer is very stretched. You've got credit card debt at a record high. You have credit card rates at a record high. You have student loan repayments that are just resuming. You have auto loans, credit cards, these delinquencies that are rising. All of these things are stacking up against the consumer. And then you take a look at this chart and it shows you that real wages, so this is wages taking into consideration inflation, are basically flat. The consumer just can simply not continue to spend at these levels, and the consumer makes up almost 70% of GDP. Some of the other things we're seeing is manufacturing has been in contraction territory for many, many months. The tight lending conditions because of the banking crisis in the beginning of this year, that is another thing that takes time to filter into the economy. We're starting to feel those effects. These are so many of the factors that we think are going to stack up against the economy, but we continue to hear that the labor market will be here to save the day. Let's just break that down. The labor market is strong. We have some structural issues because of demographics, because of lingering effects from the pandemic that have kept the unemployment rate very low. But we're starting to see some cracks emerge. And let's remember, the labor market and the unemployment rate is a lagging indicator. Companies don't cut employees until sometimes we're well within a recession. But what they will do first is they'll cut temporary workers. They'll cut the work week. And both of these things we've seen starting to materialize in recent months. So we do think we're starting to see those cracks emerge. Now, as we mentioned, we think that a recession is unavoidable, but we aren't looking for a steep, deep recession that we've seen, for example, in 2007 to 2009. Instead, this is going to be a healthy correction for the economy. We have to be able to get inflation officially under control, and unfortunately, that's going to happen by stalling this economy. If we don't get inflation under control, we can't go on to the next economic expansion, or we're going to have these recessions that happen much more frequently. Instead, we think that a recession will help the Fed to be able to get the inflation under control. We can then get on to the next economic expansion that we think can be sustainable.